Okay, Paul, I think we're about ready to start. Okay, so today we're going to be first going over credit management, and I will let him introduce himself. He will be dialing in over the phone, so you won't be able to see him, but he will be, you'll be able to hear him. And then afterwards, I will be going a little bit over debt management, and that would be today. So Paul, do you want to say hi to everyone? Introduce yourself.
Howdy, everyone. My name is Paul Schaefer. I'm a branch manager with Wells Fargo here in Bryan College Station. I work at the location on 2018 in Villa Maria. I've been with Wells Fargo for a little over a decade, and I think this is my 5th or 6th year making the presentations. This is definitely different. I'm used to standing up in front of everybody and getting eye contact and being able to point and freeze and all that other good stuff on the computer. So I apologize if I get lost on a tangent during this presentation, but looking forward to doing this with y'all and teaching y'all a little bit about credit and borrowing, and I'll hand it back over to Carla until it's ready for my time.
Yeah. Perdón, el Saliver lo más le estaba diciendo que si después de la junta se pueden quedar un momentito para que pueda hablar con ustedes, con nuestros, los de Brian, entonces quería decirles. Él acaba de decir que él es Paul, él trabaja por Wells Fargo y dice que ha trabajado ahí casi más de 10 años, entonces tiene obviamente mucha experiencia con todo esto. Hoy va a hablar primero de cómo manejar el crédito y un poco más de eso. Entonces, como ven, no lo van a poder ver porque va a estar por teléfono, entonces lo van a poder oír y yo voy a estar enseñando la presentación. Yeah, we can go ahead and get started. Let me just share the slides. Okay. The right one. Can everyone see the slides? Yes. Somebody. Okay. Okay, well, you want to go ahead and get started. We might have a couple more people joining us, but that would be fine. We can just go ahead and get started.
All right. Well, as I said before, my name is Paul, branch manager with Wells Fargo, and thank y'all for hopping online and giving me some time to talk to you about credit today. So let's go ahead and get started. So we'll be going over some basic concepts about credit, what we call the credit basics. We'll be going over debt to income ratio and how important that is to your ability to not only take out loans and lines of credit, but your ability to pay it back. The 5 C's of credit, which is basically the 5 determining factors that go into a bank's decision to approve or deny an application. And then we're going to go into how to establish credit, how to improve your credit, managing your debt, and getting when you're ready to apply for credit. So don't be shy to ask questions while we're going through. Like I said, I can get lost on a tangent or talking about an example and blow right past what you're thinking of or what question you might have. So feel free to go ahead and speak up if you do have a question. And I'll be stopping occasionally to let Carla translate for me for those folks that are on with us that speak Spanish.
Oh, and also don't forget if you don't want to speak out, you can also use the chat, whichever one. Lo de la que va a hablar hoy son conceptos básicos de crédito. Va a hablar de qué es el de deudas a ingresos, ese ratio, lo que llamamos. También los 5 C's de crédito, cómo establecer buen crédito, mejorando su crédito, manejando sus deudas y preparándose para pedir préstamos.
All right, so with credit basics, first thing is your credit report. You've got to know what banks and lenders are looking at, and so most people refer to a credit report to find out how you've done in the past, how much you've borrowed, who from, your payment history, you know, did you make them on time, did you make your full payments, things of that nature are listed on your credit report. And it's based on what the lenders report to the credit bureaus. So it's definitely something for you to be aware of and know what's on there.
El reporte de crédito es lo que una lista detallada de su historial de crédito, entonces está basada en la información que le da su prestamista, sus cuentas de crédito, su historial de pagos y los detalles de cómo administra cada cuenta. Y entonces es una representación de qué responsable es con su crédito.
The next is the credit score. Like I said, a representation of how responsible you've been with credit. So a credit score is more or less like your like your grade that's given to you, like in school and how you do in different subjects. Your credit score is your grade for how you do with your credit. It's going to show how long you've. It's going to be it's determined by things like how much debt to income you have, how long you've been on the credit bureau, so how many years you've been borrowing money, how many times that you've made your payments late, either 30, 60, or 90 days late, if you've ever defaulted on something, all that. And so usually the credit report shows your 7 years previous history, and that score is calculated depending on what the bank is asking from the credit bureau.
Y el puntaje de crédito, que es lo que está en su reporte de crédito, es como la calificación que le da los diferentes oficinas de crédito. Entonces, esto enseña qué pagos ha hecho, si hay unos que no está haciendo pagos, cuánto mejor sea su historial de crédito, mayor sea su puntuación. Entonces, lo más alto que es ese número, lo mejor que es su crédito. Entonces, y esto también le ayuda porque es lo que usan muchas personas para ver su habilidad de pagar esas cosas. Entonces también lo usan para ver la habilidad de darles más crédito, para ver qué responsables son con lo que tienen ahora.
Okay. And the next one is your credit score components. Now, go back.
Sorry.
There we go. Before I go into that, what I will say is there's 3 different credit bureaus. There's Equifax, Experian, and TransUnion. Not all banks report to all 3, and not all banks look at all 3 when they make their lending decision. So, for example, if you apply for a loan at State Bank and they use Experian, then they're going to pull the Experian bureau. But if you had previous credit at a different bank that used TransUnion and only reported to TransUnion, then State Bank's not going to see that on your credit report. Then we also have your average score, which is what a lot of people refer to as far as your I can't even think of it now. What most free credit reports show you. I apologize, I can't think of it because it's actually not something that the banks use. But it gives like an average of the 3. So trying to find out what the exact score is When you're looking at what that average is, it gives you a good idea, but it's not going to show you exactly how what that score is going to be when the bank looks at it. But what you can influence are these factors here that are broken down by percentage. And again, this is mainly an average. 35% of your credit scores from your payment history. And again, Carla, I'll go ahead and pause here so you can go over that in Spanish real quick.
Luego, lo que está hablando es igual de su puntaje de crédito. Lo que típicamente es que hay tres diferentes oficinas de crédito, tres diferentes compañías que reportan este crédito. Y estaba diciendo que cada banco no necesariamente ve a todos estos diferentes números, puntajes. Hay algunos bancos, dice que los bancos típicamente no están en esto, pero hay unas compañías que ven cuál es el puntaje de los tres combinados y luego los hace así. Pero hay unos bancos que nomás usan una específica compañía y unos que ven todos los tres, entonces es diferente de cada cosa. Pero el puntaje, lo que va a hablar siguientemente es que es exactamente lo que le afecta en su puntaje de crédito. Okay.
So what goes into that, again, 35% is going to be your payment history. So a big chunk, a third of your credit score is going to be based on, did you make your payments on time? I can't stress that enough. When I go over this, some people will say, well, you know, if I'm struggling making some payments because life happens, look at where we're at right now with COVID-19, you know, people not having jobs to go to and things like that. Kim and David, no, it's not the annual credit report that I was referring to. I've been trying to rack my brain over here trying to think of which one it is, but that's actually a different topic we'll come up to later in the presentation. So thank you for that. So the payment history is big because the banks, when they look at your credit report, they can see, okay, yes, they've struggled during this time, but they continue to make their payments. Discussing things with your current lenders when a difficulty comes up is the best thing you can do to help preserve that credit that you've built up to that point. Because a lot of times the banks, they don't want to say, no, we won't take a partial payment right now and keep you in good standing. They're going to want that to come in because the last thing that they want to do is spend money trying to collect more money from you later on. And so a lot of times the banks will work with you on stuff like that. But the biggest key is keeping your payment history in good standing and not showing default, meaning not showing that you're 30 days late or 60 days late or 90 days late. 30% is how much you owe. So that's what we consider your debt. You know, if it's showing that you've got an auto loan and you owe $10,000, and then you've got a credit card with a couple $1,000s on it and a personal loan with another couple $1,000s on it, that goes into that percentage compared to how much money you make per month. So if your payments total $1,000 going out and you've only got $2,000 coming in, then you're in a 50% debt to income ratio, and that's going to lower your credit score. I'll pause there for you, Carla.
Ahora está hablando de qué exactamente es lo que afecta a su puntaje. Entonces lo más grande que le afecta es el historial de pagos. Entonces es 35% de su puntaje es basado en eso. Entonces es casi un tercio de lo que le afecta. Entonces estaba diciendo que si algo pasa, por ejemplo, pierde su trabajo o tiene una emergencia y no puede hacer sus pagos, la mayoría de los bancos quieren trabajar con usted y ayudarles. Entonces puede ser que puedan hacer un plan de pago, o algo por el estilo, porque es de hecho más caro para ellos. Si usted no paga mandar eso a colecciones, es más caro para ellos porque tienen que básicamente vender su cuenta. Entonces, siempre hablen con quien está prestando el dinero para ver si hay algo que pueden hacer. Lo siguiente que le afecta también mucho es el que es 30%, es la cantidad de adeudado que tiene. Entonces, comparado con lo que usted gana, cuánto de ese dinero está pagando para deudas. Entonces, es todas esas deudas juntos es lo que le afecta el 30%.
The next part is the length of credit history. That weighs about 15% on the credit score. Again, what that is how many years you've been borrowing. Now, I said earlier that the credit bureau shows 7 years of history. But if you have say you've got a credit card that you've had for 20 years, it's going to show that you've had that credit card for 20 years. Once you close that credit card out, then 7 years later after you close it out, it's disappeared. And so you went from 20 years of having credit history to no years in credit history just in 7 years, if that makes sense. It can definitely be something that can have a big impact to your credit score just by having one line of credit that's been closed out and then is no longer reported. It can actually drop your credit score, even though you've not taken on any more debt and even though you've taken care of everything on time like you should have. The next one is about 10% as far as new credit. How that's going to affect you is whenever you take out something on your credit report, that's going to be a credit card, line of credit, a loan, your credit bureau is automatically going to take a hit. It's automatically going to go down roughly 10%, give or take. And the reason being is because that's new debt, the banks aren't certain of how you're going to respond to that new debt. Some people might take it on without an issue because they got to pay raise, and so therefore their budget increased and they could spend that. Some people take out credit when things get tight and tough and they don't have cash flow, and so they're almost going to immediately be in a bad position. So that's the reason why your credit bureau takes a hit right then, is it's kind of telling the rest of the banks, hey, they're in a position that we're not too sure what's going on right now, so just to be aware of it. And then the other 10% is what's called credit mix. And what credit mix is your mixture of standard loans, fixed loans versus revolving. So it's called revolving and installment. A car loan is usually going to be an installment loan. A mortgage is usually going to be an installment loan. What people refer to as a signature loan at a bank is going to be an installment loan. It gives when you sign up on that dotted line, there's an end date to that credit. Whereas revolving is going to be like a line of credit, a credit card, that as long as you maintain your credit stability, they're going to continue giving you that ability to borrow on that money, and there's not an end date set of when you can stop borrowing again.
Lo que también le afecta el 15% es la duración del historial de crédito. Entonces, el ejemplo que él dio es que si, por ejemplo, tiene una tarjeta de crédito que él ha tenido por 20 años, eso le afecta positivamente porque enseña que por esos 20 años ha estado pagando esa tarjeta de crédito. Y todo lo que es más viejo que 7 años, entonces si ya se cerró una cuenta hace 7 años, ya no se enseña en ese reporte de crédito. Entonces, eso también le afecta a lo que le llaman la relación de deudas a ingresos. Pero lo siguiente es lo que le llaman el crédito nuevo. Entonces, dice que cuando, por ejemplo, tienen una nueva tarjeta de crédito, un nuevo préstamo, eso les va a afectar negativamente al principio porque este crédito es nuevo. Entonces, los bancos o quien está prestando el dinero no saben cómo les va a afectar esta nueva línea de crédito. Entonces, puede ser que nomás querían abrir una nueva cuenta y pueden hacer esos pagos bien y no hay problema, pero hay a veces que por emergencias personas sacan préstamos o sacan tarjetas de crédito y entonces como es una emergencia, puede ser que no puedan pagar ese dinero. Entonces, por eso ese nuevo crédito les puede bajar su puntaje al principio porque es nuevo. Entonces eso le afecta al 10%, 10%. Y lo que sigue es la mezcla de crédito. Entonces él estaba explicando que depende, hay dos diferentes tipos, una que se entrega. Entonces si estos préstamos tienen una fecha que se acaban. Entonces, por ejemplo, una casa, un préstamo hipotecario, tiene esa fecha donde ese préstamo se acaba. Y eso comparado con lo que es giratorio. Entonces, como tarjetas de crédito, líneas de crédito en diferentes tiendas, esas no tienen una fecha que se acaban esos préstamos. Es nomás ya que ustedes cierren la cuenta.
And before we go to the next slide, what I also want to say is not all banks or not all credit scores are going to be calculated with this percentage mix, meaning banks can request from the different bureaus a different type of credit score based on an emphasis of one of those points. And so, for example, Wells Fargo Mortgage might request from the bureau to bump payment history to 40%, your amounts owed to 40%, reduce your length of credit history to 5%, and credit mix to 5%. And the reason being is with a mortgage, they're going to be more concerned on how much do you owe already and what has your history been, and less concerned about what your credit mix is and less concerned about how long you've had that ability to pay. They just want to see, can you pay? And then at the same time, Wells Fargo Auto Finance might request the 35 payment history, 30% amount owed, bump the length of credit history to 25, and reduce the other two to 5 each. And then you're going to have another credit bureau score. And so even though the same umbrella bank is requesting your bureau, it's going to come back with two different credit scores. So whenever we look at something like the freecreditreport.com or something of that nature, that's the reason why when you look at that bureau score, it's going to give you a rough idea, but it could be very different compared to the person you're asking for credit and what they look at.
También otra cosa que quería decir él es que hay diferentes bancos o diferentes compañías que puede ser que cambien, que pidan que cuando les llegue su reporte de crédito de la persona que está aplicando, que esos componentes de puntuación de crédito sean diferentes. Entonces, por ejemplo, si vas a un banco y estás pidiendo un préstamo para una casa, puede ser que ellos pidan que lo que usted deba, que en vez de 30% que sea 40%, que en vez de que el historial de crédito que se baje a 10% y los demás cambian. Entonces, cada banco puede ser, o banco o cualquier persona que le está prestando, puede ser que cambie ese puntaje dependiendo de lo que ellos están buscando específicamente. Entonces, como habíamos mencionado la vez pasada, que cada año les pueden recibir un reporte de crédito gratis. Ese puntaje, esos números puede ser que sean un poco diferentes comparados con los que el banco o lo que está prestando ven. Entonces puede ser que haya una diferencia en esos dos números dependiendo de lo que están buscando.
Okay. right, and so credit score. So again, people always say, okay, well, what is a good credit score? Typically here at Wells Fargo, these are the different rankings of what we consider with that credit score and how we view it. With a 760 or above, we consider that excellent. You're generally going to qualify for the best interest rates that we have to offer, depending on what your debt to income ratio is and what that collateral value is. So what it is that you're wanting to borrow against, if it's worth that kind of money. And then from 700 to 759, we consider a good credit score. You're going to typically qualify for the credit, but you're not going to get the best interest rates that are available. Fair, we consider from 621 to 699. You're going to have difficulty getting credit, and you're going to be paying a higher interest rate for it to borrow against it. And then from 620 and below, we consider that poor. You're going to have difficulty getting unsecured credit, especially from banks like Wells Fargo, Bank of America, Chase. A lot of times, because of different regulations that have happened over the years, the banker sitting in front of you is no longer the person being able to say, yes, I'm going to give this person a loan. And it goes to a building, states away, with people who are just looking at data and not at the person. And when they look at the data and that score is 620 or below, a lot of times they're very, very hesitant unless there's a good reason and a good story that comes along with that application that would justify why it's where it's at. And then from there, there's no credit score. It literally comes back on the credit bureau as saying no score. And that's going to happen for one or two things. Either you've never borrowed anything, or it's been over 7 years since you've borrowed anything, and everything's fallen off your bureau. So those are the main two reasons why somebody's not going to have a credit score at all.
Ahora, específicamente cuáles son el puntaje y qué significa. Entonces, lo que es excelente es un puntaje de 760 o más. Entonces, si tiene este puntaje, típicamente califican para el mejor interés, el mejor rango, y dependiendo de cuáles sus deudas a ingresos, eso depende de y colateral, depende de cuándo les pueda prestar, pero lo mejor que puede tener es los 760 arriba. Lo que es bueno es de 700 a 759, entonces típicamente califican para crédito y también obviamente sigue dependiendo de esa relación de deudas a ingresos, pero puede ser que no les den los mejores interés porque no está excelente su crédito. Luego lo que es justo es de 629 a 699, entonces puede ser que tenga más dificultad recibiendo crédito y probablemente va a pagar interés aún más alto. Y lo que es pobre es de 620 a abajo, entonces va a tener dificultad recibiendo crédito si tiene este puntaje. Hay algunos que puede ser que no tengan ningún puntaje, entonces dice exactamente que no tienen puntaje. Entonces, puede ser que nunca ha pedido un préstamo antes, entonces por eso tiene ese número, o si en 7 años no ha sacado nada, también puede enseñar que no ha crecido su crédito, entonces, o no ha estado activo por un tiempo. Entonces, por eso puede enseñar que no tenga nada de crédito.
And I finally remembered that other credit score type. It's the FICO score, what's often referred to as a FICO, F-I-C-O. And what that is that's not actually a credit bureau like Equifax, Experian, or TransUnion, but that's an average of those 3 scores. And so when some people will pull their credit score, what they're pulling is their FICO. It's not showing them what the 3 different independent ones are, but what their average is of all three.
Lo que quería decir antes es que a veces le dan lo que es la calificación de FICO, que es el puntaje de los tres condensados, entonces a veces les puede llegar gratis o a veces los bancos les pueden dar esta información y ese es el puntaje que están todos los tres juntos.
Okay. All right. So you've already heard me mention debt to income ratio by itself, and then also when we were looking at the different ranges of credit scores, we were discussing if you've got this score plus a good debt to income ratio, then you're going to get these kind of rates. So as mentioned earlier, a debt to income ratio is strictly showing the bank how much money you have left over from what you earn compared to how much you are legally obligated to pay at that moment. So go to the next one. It's your monthly debt payments divided by your monthly pre-tax income. So your monthly debt payments, they don't take into account your utility bills or car insurance. They don't take into account groceries or anything like that. They take into account what is reporting on the bureau plus how much you pay in either rent or your mortgage, which your mortgage would be showing on your bureau. Your rent is going to be up to you to disclose. They divide that by your pre-tax income. Pre-tax income is what none of us ever see unless we own our own business. You know, if we work for a business that cuts us a paycheck and gives us a paycheck stub, then they've already taken out our taxes that we owe on that. But they look at the pre-tax income. And the reason why they go off of that is because different towns, different states have different tax brackets. And so they take that out of account because of all the different tax implications that it could have on your income and also on your ability to pay. So that's why they go off of that. And I'll pause there for Carla.
Entonces, lo que ya hemos hablado un poco es la relación de deudas e ingresos. Entonces, lo que estábamos hablando anteriormente es de los préstamos y el puntaje. Entonces, el puntaje también importa, pero también lo que es la relación de deudas e ingresos. Entonces, es una comparación de lo que usted debe cada mes y cuánto gana. Entonces, lo que es cada mes, entonces mensualmente lo que usted debe dividido por los ingresos mensuales antes de impuestos. Entonces, típicamente nosotros no vemos este número porque obviamente nos dan el cheque con ya los impuestos quitados, pero hacen esto porque cada estado tiene diferentes impuestos, es diferente para cada persona, entonces por eso lo comparan con los ingresos mensuales antes de impuestos.
And so this is an example of how to calculate your debt to income ratio. This one is based on a $5,000 monthly income with $1,500 in monthly debt payments, and that puts them at a 30% debt to income ratio. The lower the debt to income ratio, the better position you're in. And that's one of the reasons why when we look at a debt to income ratio and we say, okay, we want to see it under 30% for the best rates, the reason being is, just like we discussed just a few moments ago, we don't take into account how much is coming out in taxes. We don't take into account how much is coming out in groceries and in utilities and in insurance. So we want to see a big gap there so that we know that you can pay everything else before, and so there's plenty of money left over at the end of the month to be able to take care of those loans that you have that are out there, because the fact is the majority of Americans are going to make sure that their family eats and that they have their lights on before they pay a bank back. And so they do take that into consideration. That's the reason why we want to see that debt to income ratio on the low end instead of the higher end.
Un ejemplo que él está dando es que, por ejemplo, si mensualmente gana $5,000, si tiene pagos de deudas de 1,500, los pone a un 30% de esa relación de deudas e ingresos. Y lo más bajo que sea ese porcentaje, lo mejor. Porque básicamente lo que ellos pueden ver es que comparado con lo que usted gana, si tiene suficiente dinero para hacer esos pagos mensuales de las deudas y también para hacer los pagos regulares, que obviamente no les preguntan exactamente cuánto paga por comida y gas y todo eso, pero la mayoría lo que estaba diciendo es que la mayoría de las personas obviamente les van a querer pagar comida, van a querer cuidar de su familia antes de pagar deudas. Entonces, por eso quieren ver que ese porcentaje sea bajo para que ellos puedan ver que pueden pagar sus deudas y también pueden pagar la vida normal, la comida, el gas, y todavía tienen dinero que les queda.
And so this is one of those things that you want to definitely keep in mind, because what we see, and especially with the older generation, our grandparental instinct is to help our kids, our grandkids. And so when our kids or our grandkids need help getting a loan to buy a car or getting a loan to buy a house, and they've made good money, they just don't have that established credit, and they need somebody there to help them, almost all of us parents will automatically sign on that dotted line and say, yeah, I'm going to back them up. The downfall of that is you just took on that debt, even though your agreement with your child or grandchild is that they're going to make that payment. That same payment is now reflecting on your credit bureau once it's reported. And so what we've seen in the past, what I've seen in the past, and just a disclaimer, before I got into the banking industry a decade ago, I was in the car business for almost a decade. I sold cars, I did the financing, the F&I, and I can't tell you how many times that a grandparent would come in to co-sign for a grandchild that they were taking on a $500 or $600 a month car note. And of course, they have full faith in their grandchild that they're going to make the payment, and rightly, they probably did the entire time. But that grandparent had a fixed income of, say, $2,000 from Social Security per month. Well, they just took on a $600 car payment that, even though they're not paying for it, it goes on their credit bureau, and now that's affecting their debt-to-income ratio. And so when they go to apply for a car of their own, they can't finance a car because that allotment of their debt-to-income ratio for a car is taken by their grandchild. And so even though they have great credit and they're not the one making the payment on it, the grandchild is, and the grandchild's taking care of it and making the payment on time every time, it's still going to prevent the grandparent from being able to buy their own car because their debt-to-income ratio is all out of whack. So that's definitely something to keep in mind if somebody ever approaches you and they want you to co-sign for them. Keep in mind that even though you might not be making that payment, legally you're obligated to make that payment, and it is going to affect your ability to get financing in the future while that debt's still out there.
Lo que estaba hablando ahorita es que si relación de deudas e ingresos también es importante. Si, por ejemplo, el ejemplo que él dio es que antes de que él trabajó en un banco por 10 años, él vendía carros. Entonces, él ha visto muchas veces que, por ejemplo, una abuela venía con su nieto y quería que la abuela sea el consignatorio de ese préstamo de carro. Entonces, la abuela no va a hacer esos pagos mensuales ni nada. Todo eso va a ser la responsabilidad del nieto, pero esa deuda todavía está en el puntaje de la abuela. Entonces, si por ejemplo en unos 2 años ella decide que quiere comprar un carro también, lo que debe su nieto afecta sus deudas de ingresos. Entonces, aunque ella no está haciendo sus pagos y el nieto está haciendo los pagos mensualmente a tiempo y todo está bien, todavía le afecta a esa relación de deudas e ingresos. Entonces puede ser que no pueda sacar otro carro porque ya tiene eso en su crédito. Entonces, nomás quería decirles eso para que lo tengan en mente si alguien un día les pide que sea un consignatorio en un préstamo, nomás tener eso en mente.
Okay, next slide. So we do have on wellsfargo.com, we do have, you can go to wellsfargo.com/debt ratio, and it'll tell you what it is. If you're unsure, it'll ask you what is your pre-tax income. It'll ask you, give you examples of your debt to income ratio, factors to take into consideration, and it'll do the calculation for you. So we do have that tool available for you.
Él quiere decir que en la página de Wells Fargo les pueden enseñar cuál es esa relación de deudas e ingresos. Entonces pueden poner cuánto gana al mes y todo lo que debe y les puede dar ese número. Entonces es algo, si quieren usar esa página, pueden hacer eso con Wells Fargo. And do they have to be a Wells Fargo client or can it be anyone?
They do not. It's free.
Y
any of our financial education tools and resources is free to anybody to access.
Okay. Nomás le quería preguntar si tiene que ser un cliente de Wells Fargo para usar eso. Dice que no, que todo lo que ellos tienen de materiales para ayudar a finanzas es abierto al público. Entonces cualquier persona lo puede usar.
All right. So again, the DTI standards, if you're at 35% or less debt to income ratio, that is very favorable because what we can see is that at the end of the month, most of the time people with that type of debt to income ratio, they have money left over for savings or for extra spending after they've paid the bills, after they've taken care of everything. Usually somebody who's had a low debt to income ratio for quite a while usually has a nice little savings built up or a nice size retirement account set up, something that they can access if something were to happen. They would be able to quickly take care of it, or they would be able to use that savings to be able to live off of regularly to make those debt payments. From 36 to 49%, it's classified as opportunity to improve. And I always kind of chuckle at that one. But 36 to 49% is usually the majority of us in this real world. We have room where we can improve our debt to income ratio by not using our credit card as much to buy stuff we don't need, or by, we've started a relatively new job and we're at a lower income level at the time compared to what we used to make, or we just took out that new car, or we just bought that new truck and we just got that loan on our credit and it raised our debt to income ratio compared to what it used to be. So a lot of different life factors happen in that 36 to 49% range. And then consider taking action at 50% or more. The reality of the situation is if your required debt payments is more than half of your pre-tax income, usually you don't have enough money at the end of the month to pay all your bills. This is the time when people are, robbing Peter to pay Paul, that saying, when they're choosing what payment they're going to make this month and which one they're going to let roll over to the next month. Those are situations that is not going to be in a favorable position to be able to take out more credit. That's going to be in a position where somebody needs to, either take a step back and say, okay, I'm going to get a loan to consolidate all this, or they're going to take on another job, or they're going to sell the house or the car that they've got the loan on to pay that off. Something of that nature needs to happen in order to have them in a position where they're making their payments on time. How do we have a young adult establish credit when they're 20? We will be getting to that in a moment. Thank you. Y'all are jumping ahead of us, but thank you for asking.
Lo que está hablando, sigue hablando de esa relación de deudas e ingresos y no más los diferentes rangos. Entonces, lo que es bueno es que ese porcentaje sea de menos de 35%. Entonces, está en un nivel que es manejable. Probablemente tienen dinero que les queda ya después de pagando todas sus deudas. Entonces, esto es lo que típicamente si están queriendo pedir un préstamo o una tarjeta de crédito o lo que sea, es lo que quieren ver, que sea menos de 35%. Si está el 36, perdón, o 49% entre esos dos, puede ser que quieran considerar bajando sus deudas para que puedan estar en una mejor posición por si acaso si algo pasa, una emergencia financiera pasa, que no les quede nada después de pagar sus deudas y todavía tengan dinero por si acaso. Entonces, lo que es lo más, no lo peor, pero si está más de 50%, es más de mitad de su dinero va a deudas y entonces es algo que es muy riesgoso porque si algo pasa, no tienen mucho dinero que les queda para guardar o para pagar comida o para si hay una emergencia. Entonces, si tienen 50% o más de deudas a ingresos, no hay muchos prestamistas que quieran prestarles dinero. Y también una cosa que alguien preguntó es que cómo le pueden ayudar a su hijo, que es un adulto de 20 años, cómo le pueden ayudar a establecer crédito. Entonces él dijo que de hecho ahorita vamos a hablar de eso. Entonces en un momentito él puede contestar esa pregunta.
On this one, it says, you know, before taking on any debt, estimate the monthly payments and reestimate DTI. Esther, give me one moment, I'll answer your question. Before taking on any debt, estimate the monthly payments and reestimate your DTI ratio so you can see how additional debt may change it. You know, some people when they read that, they think to themselves, well, you know, I'm taking out this loan because I need it or I want it and I'm okay with that. But the previous example about co-signing for somebody else, this is definitely how you'd want to go about doing that. For example, my wife and I, we have 2 kids. I've got a 17-year-old son that's a junior in high school, and I've got a freshman daughter. And so my son is wanting to get his own vehicle. And of course, as a parent, I want to be able to provide that for him. But our deal is he's got to pay for half of it. At the same time, my wife and I want to buy a house after the kids graduate. And so we've got 4 years to get ourselves set up to be able to buy the house that we want to buy. If I take out a loan to buy a car for my son, more than likely I'm still going to have that loan when it comes time to apply for a house. And so I need to go in, or I did go in and say, okay, how much can I borrow? What does my monthly payment need to be so that it stays at the 35% or lower debt to income ratio in 4 years? Now, I do have to take into account that in 4 years, fingers crossed, I'll have a pay raise or 4 since then, that my wife will have a pay raise or 4 since then. So it will be a little off, but I also have to think of what other kind of debt am I going to be taking on at that time? You know, if my son decides to go to school, of course I'm going to try and help him go to school and more than likely look at student loans and things like that. So even though I know I'll be making more in 4 years, there's a very high probability that I'll be borrowing more in 4 years. And so looking at that debt to income ratio, I said, okay, I can afford a $200 a month payment. So I went to my son and I said, okay, whatever vehicle you want to get, I'll help you get. You're going to have to pay a down payment to get it low enough to a $200 a month payment, and I will take care of that. So he's got his goal set. He knows how much money he's got to save. And at the same time, I know that I can take on that debt and still be able to do what I want to do in the future with borrowing. Sorry, I know that was long-winded.
No, that's okay. Una cosa que él estaba diciendo que antes de asumir una nueva deuda, calcule los pagos mensuales y vuelva a estimar esa relación de deudas a ingresos para que pueda ver cómo la deuda adicional les puede afectar. Entonces, lo que él estaba diciendo, por ejemplo, él está casado, tiene un hijo de 17 años y ese hijo quiere comprar un carro, entonces él le quiere ayudar a hacer eso, pero también tiene que pensar que él y su esposa quieren comprar una casa ya que sus hijos se gradúen. Entonces, él estaba diciendo que 4 años quiere comprar una casa con su esposa y una nueva casa, perdón. Entonces, tiene que tomar en cuenta que también quiere sacar un préstamo para su hijo. Entonces, pensando en eso, lo que le pidió a su hijo es que su hijo guardara lo que es el pago de bajo para el carro, para que los pagos mensuales sean más bajos, que es algo que su hijo pueda pagar bien. Y también tomar en cuenta que puede ser que, dice que ojalá que en 4 años él gane más dinero, también su esposa puede ser que gane más dinero. Entonces también les puede afectar eso. Entonces nomás antes de tomar una nueva deuda, siempre calcule esos pagos mensuales y vea exactamente cómo los va a poner en esa relación de deudas e ingresos.
All right, so Esther, you asked why when you want to close a credit card for any kind of credit score, would it affect your credit score? Now, the reason why it does that, and again, credit scores can be very tricky, is whenever credit is closed out, it sends up a red flag to the banks. If you've always had this credit line out there, why suddenly do they no longer want it? Because most credit cards don't charge you anything just to have them. Now there are the few examples of like an American Express. Some of those credit cards do have an annual fee on them, and that's because of the rewards points that go along with it. But majority of your credit cards, lines of credit, don't charge you for having them there. And so for one, it throws up that red flag. 2, say you've had that credit card for 5 years, and that's your longest line of credit you have on your bureau. The next closest to age is 1 year. You've only borrowed against that credit card for 4 years. You got a loan a year ago, so you're showing 5 years of credit. The moment you close out that credit card that you've had for 5 years, you just went from 5 years on the bureau to 1 year on the bureau. And so, again, that's another factor that goes into your credit score of how long have you had credit open. So as soon as you close it, it's no longer there. Also, some people, will close a credit card when they're going through some sort of life crisis, some sort of big financial event, like maybe a divorce or maybe a death in the family, something like that. And so they close it out as a preventative measure for them, either them using it or somebody else using it, and that throws a red flag. So, and I keep on saying red flags, you have to remember that a bank who makes loans and lines of credit, everything that we do is based on risk. Everything in our industry is this check going to pay? Is this person, this actual person? Are they going to make these payments back? Because the reality of the situation is, even if we use a car for collateral, we're depending on that card to be at the address that's on there. And as we all know, Texas is huge, much less the United States and the rest of the world. So everything that the bank does is risk. And so when a red flag goes up, that makes the bank stop and look. And the more red flags are there, it's just like when you meet an unsavory person and you're talking to somebody and they're throwing red flags up in your brain. The more red flags you see, the less you're going to believe and trust. And so with a bank, it's the same thing. The more red flags you see pop up, the less you're going to believe and trust. So that's why whenever you close out a credit card for anything, it's going to lower your credit score for a little bit.
I like my situation and ask that question because I always pay on time, but I don't use it anymore. That's why I say I want to close that card because I don't use it. But I guess I can close it because I don't want it to mess my credit score. It's
Right.
just I don't use it anymore.
And you know, that's one of the things that some people stop using credit cards because they get a better credit card that has a better rewards program on it, or a lower interest rate, or something like that. If they switch to using something else and they have this older credit card that they're no longer using, this is where you as a consumer can contact the bank and say, hey, I quit using your credit card, you know, a year ago. I still have it. I don't really need it. I'm using this other credit card because of the rewards points it's giving me, or they offered me 0% for a year, or something of that nature. And that's where you can say, where's my incentive to use your credit card? That's where you have the power of the consumer to actually make it take advantage and actually help you. You know, I had a Discover card for years. It was established when I was in college 20 years ago, and I completely and totally forgot I even had it. It got lost somewhere in a move. The card expired. One day my mom calls me and she says, hey, I've got your Discover card here at the house, because that was my permanent address when I was a kid. And I said, oh, crap, I forgot I even had that. So I had her forward it up to me. I looked at it, looked at my credit line and stuff like that, and I was using a different credit card at the time. And so I called Discover and I said, hey, I totally forgot I even had y'all. You know, I'm using this card because of this rewards program. What do y'all have to offer me? Because right now y'all don't have any rewards programs on this. And so they said, okay, well, let's take a look at it. And after conversation, they put me on a rewards program through their credit card. That was better than the one that I was using, and so I started using it. So this is where you, as a consumer who's making their payments on time, who are taking care of their credit, who has it established, that's when you can go in and use your power of the consumer and get it to be better for you. That's not guaranteeing they're going to do it, but they can.
Doesn't matter if the credit card is from mine is from Kohl's, the store.
Okay.
That's what I say. I don't use it anymore because I had teenagers too, and they don't like clothes over there anymore. That's why I don't use it.
Okay. So, you know, like with department stores and stuff like that, different ones are going to have, you know, incentives, rewards points, stuff like that. Like Best Buy has rewards points on their cards and things of that nature. And so whenever you use a credit card, if there's some sort of rewards points there, use it and turn around, pay it right off. That way you're not going to pay interest on it, and you're getting those rewards points from it. And so you're not building your debt, but it's showing that you're using your credit and you can be responsible with it. And if it all comes down to that there's no advantage for you to do it, you know, wait until you've got something else that's on your credit that's been established for a long time and then close it out. That way, once you do and your bureau takes a hit, it doesn't take as big of a hit. You've already got established credit there to back it up.
Okay, thank you.
Yes, ma'am.
Lo que ella preguntó es que ¿por qué es la razón que cuando usted cierra una tarjeta de crédito, por qué afecta su crédito? Entonces, él lo que dijo es que cuando cierra esa tarjeta de crédito, se muestra como lo que llama una bandera roja, porque la mayoría de las tarjetas de crédito no les cobran para tener esa tarjeta, entonces para ellos, no, como no les cobran, se enseña como una bandera roja porque no saben por qué están cerrando esa tarjeta de crédito. Entonces, también les puede afectar porque si, por ejemplo, tiene una tarjeta de crédito que la ha tenido por 5 años y tiene otra cosa que lo ha tenido por 1 año, cuando cierra esa tarjeta de crédito de 5 años, el historial le enseña que nomás tiene una historia de 1 año. Entonces, por eso le afecta. Y estaba explicando que esas banderas rojas de las que está hablando son porque todo esto es basado en riesgo, porque el banco o el prestamista que le está prestando ese dinero al riesgo que ustedes puede ser que no les paguen de regreso. Entonces, cuando hacen cosas así como cerrar una tarjeta de crédito o lo que sea, es lo menos que les van a confiar. Entonces, otra cosa que ella dijo es que ya no usa esa tarjeta, entonces por eso está pensando en cerrándola. Y él dijo que aunque la tarjeta de ella era de una tienda, es diferente, pero que típicamente si, por ejemplo, está cambiando de tarjetas de crédito y puede ser que tenga una tarjeta de crédito que la ha tenido por 5 años y que de veras no la usa y está usando otra que tiene mejores ¿cómo se llama? Recompensas. Entonces, lo que pueden hacer es usar su poder de consumidor y llamar a su tarjeta de crédito que ya no está usando y decirles, tengo una nueva tarjeta de crédito que me está dando muchas recompensas, que me está dando esto y el otro. ¿Qué es lo que pueden hacer ustedes como un incentivo para que me quede con ustedes y para que use esta tarjeta? Dice que usen su poder como un consumidor porque obviamente estas compañías quieren que ustedes se queden con ellos, entonces usen ese poder. Y lo que le dijo a ella es que lo que le puede ayudar es cerrar esa tarjeta ya que tenga otra cosa ahí para reemplazarlo, entonces eso le puede ayudar para que no afecte su crédito mucho.
All right, on to the 5 C's of credit. So you can go ahead and get all 5 pulled up. All right, so the credit history, your track record of managing credit and making payments on time. You'll notice how making payments on time is a repetitive theme in all of this. Capacity, your ability to comfortably manage your payments. So that's your debt to income ratio. Do you have the money to be able to make those payments back and comfortably? The collateral, which is something that you're going to pledge to secure a loan. Most of the time, collateral is going to be a car or a house. Those are your 2 most common, of course, your mortgage and your car payment. But you can use other things to pledge against the loan. Some of those might be tractors, antiques, things of that nature that a smaller bank will make a loan against. As weird as it sounds, you can use cash as collateral. Some people are going to say, if I have the cash, why do I want to borrow money? Well, if you've, one example of one of my customers that did this, he was a younger kid, and this kind of answers your question about how a 20-year-old would establish credit. This is one of those options. But he was about 20 years old. He had no credit. His mom actually came to me wanting to take out a credit card in his name to help him establish credit because he was not interested in doing it, but she was concerned about his financial future. And so, I was like, no, I can't do that. He has to be here and aware that we're signing up a credit card in his name. And so she went and talked to him, and she was like, hey, at least go get a checking account. The kid didn't even have a checking account. And so she sent him in to see me. We sat down. We discussed, budgeting, how the checking account works, using a debit card, stuff like that. And to really explain how, old school this kid was, he really wasn't that hot on an idea of having a debit card. and not because of not keeping track of his account. It's just his outlook was if I didn't have the cash on me for something, then God didn't want me to have it. He went by life that simple. We had discussed the use of credit, you know, being able to buy a car and buy a house and things like that, that he just didn't foresee happening in the near future. In his mind, I'll save up enough cash and I'll buy it when I have the cash. So he had this older truck that he was driving, and he was happy with it, didn't want to get a new one, nothing at all. So we open up his account, we have this conversation, and he goes on about his business. About 3 months later, he comes to me. He got in a wreck. It wasn't his fault. Insurance paid off that old car, and I think he got around $6,000 or $7,000. And so he tells me, he's like, all right, Paul, I heard you about the credit. I don't want to finance, I don't want to buy a nicer car than the $6,000. But I am kind of thinking about getting a house or getting a condo someplace of my own. He's like, so how do I go about being able to do that? So what we did is we used his cash that he got from the insurance check. We put it in a CD, and we secured that CD to turn around and give him a $5,000 loan. Now, the reason why we did that is most banks, if we have that cash in that amount of that loan already locked up in our accounts that the customer can't access, but it is theirs, that's a pretty fail-proof loan. It's very easy for a bank to say, you know what, yeah, I'll loan you your money back, and we're going to charge some interest, and the bank's going to make money, and you're going to get this loan, and at the end of that loan, you're still going to have this cash over here. So it's one of those situations where the customer can more or less pay themselves back at a small cost of the interest. That's also one of the cool things about a cash secured loan is that it's almost always going to have a low interest rate on it compared to an unsecured loan. Back then at that time, I want to say his interest rate was around 5%, whereas an unsecured personal loan was going to be running around 15%. So he saved himself 2/3 of what the interest rate was going to be. And they're almost always automatically approved. So he was able to use that cash as collateral for a loan, get the vehicle he wanted to get. At the end of that loan, he had all that cash already from the insurance check still sitting there, and so he was in a great place. Fast forward about 4 more years, he comes in and he's like, hey, Paul, I want to buy a house. How do I go about doing that? So I set him up with our mortgage department, and about 3 months later, he had a house. Now, that wasn't the only credit that he had on his bureau at the time. We had discussed other things, credit cards, how to manage them, things like that, and he took that advice and responsibly took care of it. But for him, being 20 years old to 24 years old, being able to buy a house was a very good turnaround for him, and it was because of that collateral that we had to be able to make that loan happen. I'll pause there for you, Carla.
Eso. Ok. Lo que ahora hablando de qué son los 5 Cs de crédito, lo primero es el historial de crédito. Entonces, su historial de gestión de crédito y pagos a lo largo del tiempo es lo que afecta eso. Lo siguiente es la capacidad. Entonces, ¿qué capacidad tiene para administrar cómodamente sus pagos? Y lo tercero es la garantía. Entonces, ¿qué es algo que usted posee que puede usar como una garantía, que usted está prometiendo para obtener un préstamo? Entonces, el ejemplo que él dio es que una mamá vino porque su hijo quería crecer el crédito de su hijo, el puntaje de crédito de su hijo, pero su hijo no quería nada de eso, no quería un préstamo, no quería nada de eso. Entonces ella le pidió que si podía pedir un préstamo para él o algo así y ella lo paga, pero obviamente no pueden hacer eso porque el hijo tiene que firmar ese préstamo. Entonces lo que le dijo él a la mamá es que lo traiga y él puede hablar con él. Y entonces lo primero que hizo es abrir una cuenta de cheques con el hijo, nomás para que ahí pueda tener sus pagos del trabajo. Y también le estaba diciendo de las diferentes opciones que tiene por un préstamo y cosas así, pero el hijo no quería. Él decía que él va a guardar ese dinero con efectivo y que él, si quiere pagar algo en el futuro, va a tener todo ese dinero guardado para comprar algo y no quería nada de préstamos ni nada de eso. Estaba diciendo que él tenía una troca que le servía a él, era vieja, pero él no quería comprar una nueva. Y algo pasó, tuvo un accidente que no fue la culpa de él, pero se metió en un accidente y el seguro pagó por la troca, por los daños. Entonces llegó y tenía estos $6,000 que le dio el seguro, pero no quería usarlos en ese momento para comprar una nueva camioneta. Lo que quería hacer es, lo que hizo es que puso ese dinero en una cuenta de CD que hablamos la vez pasada, que básicamente guardó ese dinero, esos $6,000 con el banco, y estaba ganando un poco de interés, entonces estaba ganando un poco de dinero cuando se estaba quedando ahí. Y él se compró una camioneta con su propio dinero. Luego, 4 años después, él vino y quería comprar una casa. Entonces lo que hicieron es que usaron esos $6,000 o lo que sea que fue ahora entonces, que tenía ahí guardados, lo usaron como garantía, como ese colateral, para que él pueda comprar una casa. Entonces, y obviamente también dijo que tenía otras cosas que también pudieron usar, pero ese colateral le ayudó a a este muchacho que tenía 20 años, bueno, entonces tenía 24, le ayudó para comprar su casa porque tenían ese dinero de efectivo ahí como colateral.
Esther, when it comes to opening a teen checking account, what I always advise my customers on is it's going to depend on the bank you want to use and your child. For us, when I say the bank you're going to use, here at Wells Fargo, they have to be at least 13 before we'll open an account for them. And one of the conditions is a parent or legal guardian has to be on it with them as well. When I say it's up to your child, you have to remember that they need to be responsible with it. A teen account is a great way to start making them establish that responsibility as far as keeping track of their wallet, understanding how a bank account works, not going into overdraft. So it's a great situation to get them set up for when they're on their own and they're not learning that the hard way. But again, it comes down to your teen. Both of mine have them. My son, we started his 13th birthday. They came in on a Saturday. I was working and we set it up. My daughter, we drug our feet because of the corona and reducing travel and all that good stuff. And it took us quite a long time to get hers established. It took us about an extra year compared to my son. The scary thing is my daughter's going to be the one that's a whole lot more responsible with it than my son is. But, that's kids for you. But yeah, it's going to depend, when do you trust your kid and what are your bank's rules for it? But I always highly encourage, as soon as you think that your kid is responsible enough to not lose that debit card and to understand or is ready to understand overdrafting and keeping a balance and things like that, I'm all for it. The sooner the better, because when they're on their own, then they already have that track record established. Now, doing that doesn't help anything with their credit, but it helps them establish the foundation of being able to build good credit.
Because I have my daughter have with me account in Wells Fargo. Mm-hmm. But my question is she start working and she put her money in that account, and I had the app, and I check all the time, and she spends some money, and doesn't matter coffee or shake, whatever. I just ask you because I have another boy, 13, and he asked me he want account too, but I don't know about him yet. That's why I don't ask you. Yes, he's like, at least the other one she working, and I know, and I always tell her, don't spend too much money. You need to be in there, and it's like I wanted like she learned how she had to,
Right.
deal with like if you want to go buy stuff, but you have to think about it. You can, leave that account in zero and all this stuff.
Right. Yeah. It's going to depend on how much you trust your child.
Yes, the thing is, like, my question is like, the other day she go with her friends, I don't know, I think the Starbucks or something, and she want to pay with a card. And I guess one time they don't let her to, like, the bank don't approve the payment. Like, I guess because she's together with me, or maybe because she's still minor, because she's 16. That can happen.
Honestly, I'm not too sure on that. As far as why a payment wouldn't go through, there could be a number of different factors. I would just follow up with the banker that you're comfortable with at the bank, contacting them and say, hey, this is what happened, and they can look into see what kind of technical issue there was.
Thank you.
So on those last two 5 C's of credit, capital, which is your savings, investments, and other assets that you can use to repay a loan. Again, that's just like having cash to secure the loan. Investments and other assets can be taken into account by a bank if those are sitting with the bank, or you can show that you have them. So, for example, if I've got $10,000 in the stock market, and I'm showing that I've got it in a very low risk type of stock, then they're going to consider that as more or less backup plan if something were to happen. And then the conditions, the economic environment, and how you plan to use the money. We're in one of those times with COVID-19. If right now, if you said you wanted to take out a $100,000 loan to open a bar, that's probably going to be a big no from the bank because bars aren't open, even though the governor just released today that he's going to let other businesses go back up to 75%. You see where I saw where it said bars are still not allowed to reopen. So it would not be a good decision for that bank to say, here's $100,000 to go open a loan when we don't know when you're going to actually be able to turn a profit on that. One of the other conditions that happened in my professional career is back in 2008 when the financial recession hit the United States. Not only did the recession hit, but at the same time, diesel fuel skyrocketed. And so nobody was borrowing or nobody was buying the big F-250, F-350 diesel trucks because nobody could afford to put the fuel in them. And so diesel trucks lost a lot of value. Literally within 1 month, you saw them lose $10,000 in value strictly because of diesel prices. And so in turn, when we were trying to sell that truck, we couldn't get a loan that was longer than 4 years. That 4-year loan compared to the normal 6-year loan that we did almost doubled their monthly payment on it, and the customer couldn't afford it. So that was a way for the bank to say, yeah, we'll loan you money on it, but we're gonna make you pay this off a whole lot quicker than you did in the past because we still don't know what's going to happen. So those are those two examples of conditions that can affect if something's going to be approved or not. And I haven't ignored the chat down there. I'm going to get to those questions shortly.
Siguiendo con, bueno, lo primero preguntaron cuál es la mejor edad para abrir una cuenta para un adolescente, y entonces él dice que depende de cada banco. Con el banco de ellos tienen que tener por lo menos 13 años para abrir una cuenta de cheques, una cuenta corriente, entonces se puede ser una buena oportunidad para enseñarles a sus hijos cómo ser responsables con su dinero. Siguiendo con lo que buscan los prestamistas, lo siguiente es capital. Entonces, cuáles sus ahorros, sus inversiones y otras actividades que podrían ayudar a pagar un préstamo. Y lo siguiente es las condiciones. Entonces, cómo planea utilizar el préstamo y el entorno económico. Entonces, por ejemplo, él dijo que si está tratando de pedir un préstamo hoy en día para abrir un bar, por ejemplo, que el banco no les va a dejar hacer eso porque ahorita los bares, perdón, no están abiertos por COVID. Entonces, eso puede ser obviamente es muy diferente hoy en día, pero eso puede ser una condición que les pregunten el banco o el prestamista para saber exactamente cómo están planeando usar ese crédito.
So establishing credit, that's a question that has been asked. So first we want to lay the foundation for good credit. Paying bills on time, opening a checking account and using a debit card responsibly, and building a savings account. Now, those three don't create credit, but like it says, laying the foundation for it. Paying bills on time every time lays the foundation, because when you don't pay your bills, and something goes into collection, then you're behind the 8 ball. It's reporting against your credit, and it's on something that you didn't even borrow money for. So that's how paying your bills on time every time helps lay the foundation. Opening a checking account and using your debit card responsibly, that sets the stage for learning how to use a credit card and not going over a credit limit, not spending what you can't afford, using a credit card as a loan instead of as a line of credit, and building a savings account. What that does is it helps people establish a budget to have that backup savings account to pay for things in the future that they're not gonna have to rely on credit, but can if they need to. So those are going to be the 3 things that you're going to want to tackle before applying for credit, so that you can show at least this is what I've done.
Ahora hablando de cómo establecer un buen crédito, lo primero, estas cosas les ayudan con hacer una buena fundación de un buen crédito. Entonces, lo primero son las bases para hacer eso. Lo primero es pagar sus biles, sus facturas a tiempo y todo el tiempo. Entonces, eso obviamente les ayuda para tener buen crédito y tener esa responsabilidad. Lo que sigue es abra una cuenta de corriente, una cuenta de cheques y uses esa tarjeta de débito, responsablemente. Entonces, eso les enseña cómo checar exactamente qué dinero tienen, no gastar más de lo que no tengan, y les da la base para si quieren una tarjeta de crédito en el futuro, ya tienen esa base con la tarjeta de cheques. Y lo último es abrir o tener una cuenta de ahorros. Entonces, esa cuenta de ahorros le ayuda porque está estableciendo un presupuesto y cada vez está guardando dinero, y eso igual, todo esto les ayuda como una base para tener buen crédito.
So ways to get started, consider Gasoline and retail credit cards. Gasoline cards are outstanding credit cards to be able to establish credit, because if you're trying to establish credit, 99% of the time you've got a job, 99% of the time you got to pay for gas to get to that job. And so a gas credit card is allowing that person to use a line of credit to purchase something that they're going to need anyway and is going to be built into their budget anyway, and sometimes take advantage of rewards points, but if anything, show the ability to borrow and pay back, because a gasoline credit card should never be something that carries a balance over. We're using that gasoline. It's built into our budget. It's an expense that we have every month anyway. So we definitely need to be responsible and paying that credit card bill off in full, because that would be coming out of your debit card, out of your checking account anyway if you didn't have it. So that's one. Retail credit cards, things like, you know, Best Buy, Kohl's, showing my age when I say Sears, but Sears is no longer. Maybe Conn's has their own credit card. There's a lot of those types of department stores that offer retail credit cards. Now, one thing to keep in mind is they might not report to a bureau. They might be using their own financial power to create that credit card for you, and it's just borrowing against Best Buy, or it's just borrowing against Kohl's, and it's not a credit card that's going through another bank. So, for example, Furniture Row, their credit cards that they issue to customers who apply for it actually goes through Wells Fargo. Wells Fargo takes on that debt, and we get that debt and we service the credit accounts. But some furniture places, I want to say like Stars is the one I can think of right offhand. You get a credit card through them, and it's just Stars. And so since they're taking on that debt, they're not going to report to the bureaus what your credit looks like all the time. Usually they're only going to report when it's bad and not when it's good. Whereas if that credit card routes through a bank, that bank is something that they do every month. That's just built into how the bank operates. And so you're going to have, you know, that's one thing to consider on retail credit cards. And I'll pause there for you, Carla.
Una de las siguientes actividades les puede ayudar para construir su historial de crédito. Lo primero que él estaba diciendo que es consideren obtener una tarjeta de crédito para gasolina o una tarjeta de crédito en una tienda. Dice que las de gasolina les puede ayudar mucho cuando están tratando de establecer un buen crédito, porque nomás usan lo que ustedes necesitan, obviamente no se están gastando más de lo que necesiten en gas. Y ese dinero ya los tienen en su presupuesto porque ya lo van a gastar, obviamente. Todos necesitamos llenar el tanque. Entonces, le puede ayudar para establecer su crédito. Otra cosa son en las tiendas como Kohl's, como Walmart, cosas así. Les puede ayudar a establecer su crédito porque usualmente no están prestando mucho dinero y es más rápido, más fácil de pagar ese préstamo. Pero lo que él estaba advirtiendo es que no todas estas compañías publican esta información. Hay algunos que puede ser que están con, por ejemplo, una compañía que él dijo de muebles, no necesariamente reportan eso cada mes o cada año o lo que sea, nomás lo reportan si no están pagando. Entonces, asegúrense de tener, si es posible, obtener una tarjeta de crédito con una tienda o muebles o lo que sea, que sí reporten cada mes, porque obviamente si lo reportan y están pagando mensualmente y a tiempo y todo, les puede ayudar a crecer su crédito.
Becoming an authorized user on a trusted person's credit card. So, for example, if a parent has a credit card already established, you know, they can contact the credit card issuer and say, you know, can I add my kid as a authorized user? What they'll do is they'll issue a credit card in that child's name for them to use, but the financial responsibility resides on the parent, not the kid. Now, sometimes that bank will report them as an authorized user on their credit report, and so it does go on there and show that they have the ability to use that. Sometimes they don't. It just depends on the bank and what their policy is. So there's no guaranteeing it. You would need to ask first if that's the reason why you're adding them to the credit card. Applying for a loan with a co-borrow, co-applicant, you know, that's probably one of the most traditional ways to build credit as a younger person is when they're, you know, ready to buy a car, parent will co-sign for them to help them get established or to help them get a lower interest rate. Charging only what you can afford. I cannot stress that enough. Matter of fact, I'll stop there and let Carla go over the other two before I get into that.
Lo siguiente puede ser que se convierta en un usuario autorizado en una cuenta de una persona de confianza. Entonces, puede ser si tiene hijos, puede ser una buena opción para ser autorizado y checar a tiempo todo eso. Otra cosa que puede ser que les ayude es obtener un préstamo a su nombre con un cosigner, con un cosignatorio o un cosolicitante, especialmente para los estudiantes. Por ejemplo, él dijo que es una buena opción porque muchas veces, como no tienen esa línea de crédito, puede ser que no les presten dinero, entonces tener a alguien que es como cosignatorio o cosolicitante les puede ayudar para establecer ese crédito, para que los confíen, para que les confíen en establecer ese crédito.
Again, charge only what you can afford. When people establish credit or are establishing credit, or just young, they have this habit of establishing a credit with a credit card, doing good for a couple of months, not really putting anything on it, and then they see that TV they want, or the sound system they want, or the computer they want. Something that is just under whatever that credit card limit is. And they tell themselves, I will stop eating out, I will stop going out, I will stop doing this so that I can make the payment on this and pay it off quickly and get this thing that I want. So they do it. And they go a month not cutting back because they haven't seen that bill yet. And then they get the bill. And they do the math and they say, uh-oh, to pay this off in a year, I've got to pay $100 each month to pay that off in a year. But the bill only says I only owe $25. So I'm just going to do $25 this month, and I'll start next month. So they make $25 a month payment, and they don't stop spending the extra stuff that they said they were going to stop spending. And the second bill comes, and they said, ooh, now I got to pay $150 to get it paid off in a year. Or I could pay the $25 minimum payment. So they pay the $25 minimum payment. And then next thing you know, they've hardly made a dent in how much they owe on it. And that interest is just, they're just paying the interest every month. They're not actually paying it off. When we say charge only what you can afford, credit cards were created to be able to use in advance of getting your paycheck and paying it all off. And somewhere in history, it got turned into a loan. A loan is designed to pay off in a year, 2 years, 3 years, something. It's something so that if you didn't have that money now, you'd be able to pay off over that term because it's more than your paycheck would allow you to make at once. Whereas a credit card should only be used for things that you're going to pay off every month. Things like your gas, your groceries, your medicine, utilities, things like that would be coming out of your checking account to pay for. Use your credit card to pay for those. And there's a number of different advantages of it, and I'll get into that later. But using a credit card to buy that TV that's on sale for, its normal price, $2,000, and they've got it on sale for $1,000, and you say, I just saved myself $1,000. No, you just borrowed $1,000. You didn't save $1,000, you borrowed $1,000. So that's the reality. That's probably the hardest part on charging only what you can afford. Because what happens if you don't is the next point of maxing out your credit accounts. When you max out your credit accounts, it lowers your Beacon score, your bureau, because not only are you taking on more debt, your debt to income ratio is rising because you got more debt, therefore you got a bigger payment you got to pay, but your income hasn't gone up. But also, when you go to apply for something else, there's another red flag that's thrown up. If you've got a couple credit cards out there that have limits of $1,000 each, and they're all sitting around $800 or $900, and you go to apply for another credit card, that just tells the bank you can't afford the ones you already have, and you're getting more debt, and you're not going to be able to pay that off because you've got those other ones that you haven't paid off. So it's one of those situations where even if you're making your payments on time every time, just having your credit lines maxed out is going to stop a bank from loaning you money.
Lo que dice lo mayor que él ve cuando personas están tratando de tener crédito bueno y todo así, es lo que la mayoría de las personas no cobran solo lo que pueden pagar. Dice que es especialmente cierto para las personas jóvenes, que yo puedo admitir que yo fui una de esas personas, que cuando primero obtienen una tarjeta de crédito, al principio no gastan mucho, gastan poquito de vez en cuando, nomás lo que puedan pagar, pero a veces pasa que en un mes deciden que necesitan gastar dinero o no quieren no quieren tomar buenas decisiones, y lo que pasa es que llega al último del mes, llega la cuenta y es, no sé, $1,000. Es algo que no pueden pagar muy rápidamente. Entonces lo que hacen es que pagan nomás el mínimo, y lo que pasa es que nomás están pagando el interés. Entonces les toma mucho tiempo pagar ese dinero de regreso. Entonces lo que él dice es que no hagan eso y nomás cobren solo lo que puedan pagar. Y también evite agotar sus tarjetas de crédito, que las dos cosas son similar, que no quieren, les afecta mucho negativamente si está usando mucho de su tarjeta de crédito o si está cobrando más de lo que usted pueda, porque dice que las tarjetas de crédito empezaron como algo nomás para ayudar, antes de que les paguen, nomás cobran lo que necesiten, lo que puedan pagar de regreso, y luego se ha convertido en un préstamo.
And remember, building credit is different for everybody's situation. People who use it more are going to build and can destroy credit just as faster than somebody else can who isn't utilizing it. So also, people make different amounts of money, therefore their debt-to-income ratio is going to be different. So just because I built it within, I got myself to being able to borrow money whenever I needed it in a year, it might take another person 18 months, 2 years. And something else to take into consideration that Madeline just brought up is not increasing your debt while working towards buying a home. So, going back to the example that I gave you about calculating my debt-to-income ratio, and me and my wife wanted to buy a house in the next 4 years, while at the same time trying to, provide a vehicle for my son and school, hopefully, for my son afterwards. Throughout that time, taking on more debt-to-income ratio can kick me out of the ability to buy a house. And so while a credit card might not seem that much, just, for example, Best Buy, a lot of times they'll offer you 0% for a year or 18 months or 2 years when you spend X amount of dollars. Well, getting 0% for 2 years on a awesome flat screen is cool to not have to pay interest on it. The reality of the situation is that $2,000 flat screen could have raised your debt-to-income ratio just over that barrier, and you could be disqualified from buying the house that you want to buy to put that $2,000 flat screen in. So definitely, when you're moving forward and you're wanting to make purchases using credit, you definitely have to stack rank those and place each one in a row to say, okay, this is my top priority. So if your house is your top priority, you're going to want to make sure that you're not increasing your debt-to-income ratio or your debt ratio until you get that. If your car is the highest priority, then you're going to want to make sure that you're putting a down payment so you can get a better interest rate. Things of that nature, put that priority on each of your credit needs and take the steps necessary to be able to ensure that it is. And one of those big things is not taking on more debt while you're trying to get a house. When you're looking at getting a house, the only thing to do for your credit is to make sure that you're making your payments on time. You definitely don't want to take on any more debt.
Una cosa que Marilyn dijo que sí podía hacer el comentario es lo importante que es no subir sus deudas, especialmente cuando están tratando de comprar una casa, por ejemplo. Y es muy, muy importante hacer eso porque si, por ejemplo, en el tiempo que están cerrando su casa, deciden comprar una televisión de, no sé, $2,000, esos $2,000, aunque no sea mucho dinero, les puede afectar mucho con eso, lo que llamamos las deudas a ingresos. Y especialmente con nosotros, con Habitat, no sé si es diferente con las diferentes Habitats, pero por nosotros tiene que ser menos de 30%. Entonces, en ese tiempo no pueden subir sus deudas a ingresos. Y básicamente lo que él está diciendo es que hagan una prioridad lo que es el préstamo, la hipoteca de la casa, porque es obviamente una compra muy grande y que van a estar pagando por un tiempo, entonces no quieren subirlo en el que importante es y no estar gastando mucho o pidiendo más deudas.
All right, so improving credit. We've already established it. We might have made some mistakes. How we go about improving it. Now, what I always like to start off on this part is 95% of people go through needing debt to improve their credit. Conversation I had with my kids the other day, they were talking about COVID-19 and they were learning the economic impact that it has. I brought up to them that 2 months after I graduated from A&M, we went through the Great Recession in 2008. There was a stock market crash in the 80s. There was the Great Depression in the 20s. So it happens. And some people get to the point where they're like, well, my credit's so bad, why even bother? The great thing about credit is that it's revolving and you can improve it. It just might take a little bit of time. So how to improve your credit. First, check your credit report. Annualcreditreport.com is one way to get it. You can get all your bureaus, you can get your FICO once a year. That's the reason why it says annual. Everybody is entitled to one of their credit bureaus, a copy of their credit bureau each year for free. Now that is, remember there's 3 different credit bureaus, Equifax, Experian, and TransUnion. So some people will pull all 3 at once. What I recommend doing is pulling them 4 months apart. So once in January, once in April or May, another one 4 months later, and so forth. Now the reason being is majority of banks report to all 3. So if there's something that's not reporting correctly, you're going to be able to see it within 3 to 4 months versus waiting 12 months to see it again. Okay, so that's the first thing, getting your credit bureau and seeing what's on it. And I'll pause there for you, Carla.
De hecho hablamos un poco de esto la vez pasada, pero un buen consejo de cómo mejorar su crédito es checar su crédito como les dije la vez pasada, cada año les dan un reporte de crédito gratis. Entonces chequen ese reporte de crédito cada año. De hecho él dijo que hay diferentes opciones y hay uno que puede obtenerlo 3 veces en un año, entonces lo puede checar a principios de año, en medio y al finales. Y esto obviamente les ayuda para tener una mejor idea de cómo está su crédito, como si hay algo que puede ser que no es que no debería estar ahí, les puede ayudar para checar todo eso y asegurar que todo esté bien. Okay. I think I covered it all. Paul, are you still there?
Sorry, I had you on mute. My bad. I was over here talking to myself. So next thing was be responsible, make consistent on-time payments. Again, that's the theme. On-time, consistent payments. Even if it's your minimum payment due, make sure it's paid on time. Every loan, line of credit, lender is going to give you the opportunity to set up an automatic payment. I fully understand people not trusting, not wanting to do that. They feel like they're losing control. They feel like they don't trust this lender. What if they pull out too much? What if they pull out twice? I'm not saying that never happens. I will say that that usually happens due to a computer error. Computers are written by humans. Humans make errors. A bank doesn't want to put itself in the situation to have an upset customer. So they're not going to do that on purpose. But take advantage of automatic payments if it allows you to and you feel comfortable with it. If not, talk to your bank that you do bank with your checking account. A lot of times they're going to offer you some sort of bill pay system so that that can go out at a regular basis set by you, and you can have control of sending money to them versus them pulling money from you. I love my bill pay system. That is how I pay all my bills because I'm one of those people who has an issue with letting go of control, and I work at a bank, so I fully understand that. Using the bill pay system allows me to control that, but at the same time, I don't have to worry about if I forget to send that payment because I've got it set up to automatically send it. Keeping your balances low, so if you're improving your credit, you get a line of credit available to you, don't max it out. Use as little as possible of that credit. When I said earlier about getting a gas card and turn around and paying it off, if you're spending, $40 a week on gas, make it a habit of every Friday making a $40 payment to that credit card. And that way you keep that at a zero balance every week. You're fresh at zero. If something were to happen, then you don't have a month's worth, you don't already have $160 put on that credit card over a month's worth of gas and then not be able to pay that $160 back. So doing things like that are going to keep you in a good position, keeping your credit low, making those payments on time. You're going to be establishing those other three habits of improving your credit. And then stabilizing your situation, setting a budget, and making at least the minimum payments on time for each account. There's that theme again, making the minimum payments on time for each account and setting a budget. Like I said, the last slide, credit cards are not created to use as a loan. And people often do to get what they want. We get what we want by saving money, by creating a budget to be able to create that savings plan, and that's how we get what we want. We use credit to pay for what we need, and then in turn, we're able to pay that back.
Siguiendo con mejorando su crédito, lo más importante es ser responsable, hacer pagos consistentemente. Creo que es la palabra. Consistente, gracias. Hacer esos pagos y dice que hay unos lugares que tienen la opción de sacar el dinero que debe directamente de sus cuentas de cheques. Entonces, él dice que él sabe que hay muchas personas que puede ser que no confíen en eso, que piensen que que les van a robar el dinero o algo así. Obviamente eso no es el caso, pero si puede usar eso, el que lo use para que no ni tenga que pensar de eso y asegurar que cada mes esté pagando responsablemente esas cosas. También tratar de mantener sus balances bajos, tratar de usar lo menos posible de crédito que pueda, no gastar a lo loco y también estabilizar su situación. Entonces, lo más importante es tener un presupuesto, que es lo que vamos a hablar en la próxima clase, y hacer por lo menos el mínimo cada mes de los pagos, pero obviamente si es posible hacer más, pagar más de lo mínimo para asegurar que tener esos salarios bajos, perdón, esas situaciones bajas.
Okay. And so this is an example, strictly hypothetical, but an example of what good credit gets you. So this is on a $15,000 loan. Down at the bottom, with excellent credit, you're looking at 5% good credit, 10%, and fair credit, 15% interest rate. And then it's got your corresponding monthly payment, and this is figured at 60 months. So if you have fair credit and you're able to get that loan at 15%, you're paying $427 a month. Now, $427 a month could be a very easy payment for somebody to make, even if they have bad credit. If they make great money, they just haven't been responsible in the past or are currently not responsible, then $427, isn't a bad payment to have. But somebody with excellent credit can borrow that same amount of money, get that same vehicle at $352 a month. That's a savings of $75 a month. So multiply that out over the 60 months. $4,500 is what the good credit saved that person. $4,200 to $4,500 a month over 5 years. That's a lot of dollars. That's a good chunk for a down payment for a house. There's a lot of things I could think of to do with that. I don't know about y'all, but I could think of a lot of things to do with a little over $4,000. So, and the only difference is the credit, good credit versus medium credit versus worse credit.
Esto es un ejemplo que él quiere enseñar. Obviamente no es algo necesariamente que sea verdad, pero por ejemplo un préstamo de $15,000 que sea de un carro, si tiene excelente crédito, nomás está pagando 5% de interés, entonces su pago mensual es $352. Comparado con buen crédito, tienen el 10% de interés y luego crédito justo es al 15% de interés. Entonces, comparado con lo que está pagando mensualmente con ese 15% de interés, es una diferencia de $75, que no parece mucho, pero eso en un año es casi $1,000, unos $900. Entonces, obviamente teniendo un buen puntaje de crédito les ayuda mucho a tener bajos pagos, bajos intereses y al final les guarda mucho dinero.
All right. So managing your debt. So once you have debt, something happens, you're going to sit back and say, okay, how do I take care of this? Talking to the banks that you owe the money to, definitely something that you can do. A lot of them will listen, will understand what's happening, and they will offer some sort of plans to help you get caught up. But these are some tips on how to go about tackling your debt. Consider debt consolidation. Now, it's got that asterisk next to it, and all that tiny writing down there at the bottom. I'm going to go over all that tiny writing down at the bottom. Basically, what it's saying is make sure that debt consolidation is the right choice for you first. And the reason why I say that is there are some companies who offer debt consolidation. That's all they advertise. They go about that by stopping payments towards your lenders, getting your lenders in a position to be willing to negotiate with your debt that you have, and then you pay them, and then they pay your lenders based on the agreement that they've got with them. Now, if you're in a situation where that's your best option, that's your best option, and do it. It's going to get your debt paid down. If you're in a position where that's not your best option, don't do it. And the reason being is when they go and they negotiate for you for your debt and to get it lower, it's going to report back on your bureau. It'll actually report back negotiated this balance for lower balance by third party. Now, while it does help your credit showing that it's paid off and you no longer owe that, that is a big, big, big red flag for banks when they see that notated on your credit bureau. Because what that says is you weren't responsible enough to take care of your debt. You wouldn't go to the bank to say, hey, I've got this going on. Is there any help I can get from y'all? Is there anything that we can do to adjust? You just said, I don't want to talk to y'all. I'm going to let them handle it. Okay? A bank's not going to like loaning money to somebody who's already done that. They're just not. Not saying that you won't get it, but that's a big, big, big red flag. A true debt consolidation loan is very beneficial as long as it's the right situation for you. And when I say real debt consolidation, meaning going to a bank and saying, okay, I've got $8,000 in credit card bills that my minimum payment across all of them are $1,000. Can I get out a loan to pay all those off and pay just y'all? Those are great situations to be able to get into, because a lot of times doing a debt consolidation loan like that, when you're looking at all your credit cards, you're going to see an 18% interest, a 22% interest. You might see a 5% or 0% here or there, but the majority of your credit cards, you're going to be looking between 18 and 25% interest rate on those. You get a loan from the bank, you're going to be looking at 10 to 15%, give or take. So automatically you're paying less in interest. You get that loan payment of, let's say $500, and it's paid off in 3 years. $500 per month paid off in 3 years is a whole lot easier than $1,000 for the next 30. And when I say 30, I'm not joking about that. If any of y'all have credit cards that have balances on them, whenever you get that bill in the mail, I know we never want to look at them because it reminds us of how much money we owe somebody else, but look at it because it's going to show you your balance, it's going to show you your minimum payment, and it's going to show you how long it takes to pay it off. On average, any credit card that has a balance of over $1,500, that minimum payment is going to take you 30 years to pay off. And then you're going to see the big difference between your balance that you owe and how much you're going to end up paying over those 30 years. And the difference is huge, how much money you're going to pay in interest. Then right below it, they'll show, like, if you double your payment, you'll have it paid off in 4 years. And it'll show you the small difference in the balance and what you're going to actually pay, because you're eliminating a lot of the interest compared to the 30 years. So when you go to do a debt consolidation, it's going to help you in that sense. But also make sure that if you're including another loan into that debt consolidation, that you're going to have to realize that if you're going to have that loan paid off in 2 years, but you just signed up for a 5-year loan, you've got another 3 years of paying on it. So there are, it's math. You're going to have to look at it and say, okay, which way is best for me? Can I make this higher payment for another year and have it paid off, or do I need to get a lower interest, a lower payment and stretch it out a few more years? So definitely something to take into consideration when looking at debt consolidation. So I'll pause there for you, Carla.
Lo que está hablando de cómo igual manejando sus deudas, lo primero es considerar la consolidación de sus deudas. Entonces, pero dice que tenga en cuenta que a veces puede ser una mejor idea consolidar todas sus deudas, pero no siempre es mejor. Entonces, obviamente, ver ese contrato muy bien y hablar con su banco para ver cuáles opciones tiene. Lo que sigue también es pagar sus deudas más rápido, haciendo un refinanciamiento a un plazo más corto. Entonces, en vez de pagarlo en un año, lo paga en 6 meses. Entonces, eso le ayuda a pagar sus deudas más rápidamente. Reduzca sus pagos mensuales para ayudar a liberar efectivo. Entonces, entonces, si es posible, por ejemplo, si tiene un préstamo estudiantil, que pueda bajar esos pagos mensualmente, obviamente les va a tardar más para pagar ese préstamo, pero les puede ayudar para guardar más dinero. Por ejemplo, pague primero su préstamo más caro, es lo que ellos recomiendan. Y esto obviamente les ayuda para que ese interés no crezca más, porque obviamente lo más caro significa que ese préstamo tiene el interés más alto. Entonces, si paga ese primero, ya no va a tener que pensar de ese préstamo. Y lo último es saber sus límites. Entonces, saber exactamente cuánto puede pagar mensualmente, y si es posible pagar más de del mínimo, hagan eso, pero obviamente sepan sus límites y no se vayan a estresar mucho por eso.
Okay. Paying off debt faster by refinancing to a shorter term. There's a good example right there. Looking at a $15,000 loan, and this time you're getting the same interest rate. Over 3 years, it's a $468 payment compared to 10 years of $180 a month payment. I like the $180. That sounds a whole lot more doable to me. But when you turn around and look at your interest paid over the 10 years, $6,600 just in interest versus in 3 years, $1,800. So big gap in how much interest you're paying. That interest is you're paying the bank to take your money. I know that sounds weird coming from somebody who works at a bank, because that's how they pay me every paycheck, but that's the reality. You're asking the bank, please take more of my money so that I can stretch this out over a longer term. But if you can't do the 468 and the 180 is doable, there's no shame in that. It is what it is. It's what we need to do to be able to take care of our life and make things happen. But there's a good example of the shorter the term, the less money you spend overall. Lower your monthly payments to help free up cash. I know that doesn't sound that easy at first, but when we look at our budget and we say, okay, do I need this? For example, my wife went through a major career change a few years ago. She had her own business. She was, quite frankly, my sugar mama. And it was awesome. But we lost her business literally overnight, and she had to find a new career. She went 6 months without having a job. So when that happened, first thing I looked at was lowering our monthly budget. Can we get this down to where I can just pay for everything and not having to depend on her? So one of the first things I looked at was our recurring bills, cell phone bills, cable bills, stuff like that. As bad as it sounds, I had no idea how much money we were paying to Suddenlink. No offense to Suddenlink, but I was paying a little over $400 a month. I had all the channels, DVR, the highest speed internet that we had that was available. I had all of it. When I started looking at different options, I was able to reduce that from over $400 to roughly $160 a month by going through YouTube TV, restricting our services with Suddenlink down to just high-speed internet, using the YouTube TV for cable, subscribing to HBO on its own. Like, there were different things that I could do that while I didn't just have to send one payment out to one company, I was able to reduce my monthly budget. And so, we cut our cable bill in half, over half. And so that allowed me to manage the rest of the debt that we had out there. Knowing your limits, again, that goes back to knowing if you can afford to finance something or not. knowing if you can afford to go out to eat, knowing if you can afford to spend money on those frivolous things. And then lastly, paying off your most expensive loan first. Now, there's different ways of thinking when it comes down to paying off your debt. I'm not somebody who's just going to go along with whatever the bank says to say. I'll say what I think. Paying off your most expensive loan first, that kind of leaves it out in the open, because what do people consider expensive? Are they just talking about the monthly payment, or are they talking about the entire loan dollar amount? The reality of the situation is we're not going to be able to pay a mortgage off first. We're not going to be able to pay a car off first, whereas those might be your most expensive. But when you sit down and you look at your bills, if you've got a handful of credit cards out there that are $500 here, $1,000 here, and then you got a $20,000 car loan, it's not realistic to pay off $20,000 when you have these other smaller ones over here. So what I will say is focus on your lowest balance first. And if we just use credit cards for an example, if I've got a $500 credit card, a $1,000 credit card, and a $1,500 credit card, then all of them are going to have roughly the same minimum payment of $25 to $35 a month. So if I go into the $500 one and I start making all the payments available that I can to it, say I pay $100 a month on it, I'm going to have it paid off in 6 to 7 months. Then I can take that $100 that I was paying on it, add that to the $25 minimum payment on the next one that's at $1,000, and within a year, I'll have that one paid off. And then I can take that $150 that I was paying on those two and put it to the other one that's at $1,500 balance. All the time I'm still making my minimum payment to it and I'm keeping it in check, but then I can start dumping large chunks at it. And so as you go through your budget and you start paying things off, you're able to take that payment that you were making to it, add that to the next one, and let that snowball in a good way to pay those off. But attacking them one at a time will make it a realistic way of paying off your debt, instead of just saying, oh God, I've got all this out here, how am I going to pay off? You know, instead of saying, I've got a total of $5,000 in credit cards, how am I ever going to pay that off? Say, okay, I've got a $500 credit card here. Let me tackle it, let me get it paid off, move over to the next one. So that's a great way of going about paying those off.
Un buen ejemplo de que cómo les puede ayudar haciendo su préstamo a un plazo más corto es ese ejemplo que está enseñando ahí abajo, que comparado con 3 años nomás paga $1,000, 860 de interés, y este préstamo de $15,000, o comparado con 10 años paga casi $6,600 de interés. Entonces es casi más de 5,000 más de lo que es el préstamo está pagando en interés. Entonces eso le puede ayudar a hacer el plazo del préstamo más corto, les puede ayudar así. También estaba diciendo que aunque ahí dice que le puede ayudar a pagar su préstamo más caro primero, él dice que él personalmente ha visto que es mejor pagando sus préstamos más chiquitos primero, porque lo que les ayuda es, nomás están enfocando en una cosa a la vez, entonces les ayuda a, o sea, nomás, por ejemplo, si tienen un préstamo de $500, pagan ese primero y luego, ya que paguen ese préstamo, pueden usar el dinero que estaban usando para pagar ese préstamo chiquito para el siguiente. Entonces les ayuda a pagar sus préstamos, él piensa más rápido porque están enfocando en cosas chiquitas primero y luego de ahí van y pagan el resto. Y obviamente lo que ya había dicho antes de saber sus límites y saber exactamente con su presupuesto qué gana cada mes, qué es lo que tiene que pagar cada mes, y de ahí ver qué es lo que puede agarrar de deudas.
All right, so
O sea,
when you're getting ready to take out credit, getting ready to apply, first thing you want to do is identifying your financial goals. Now, I know this kind of sounds like in a perfect world or, you know, kind of a fantasy land, but the reality of the situation is if you're trying to move forward and you want to make progress, you got to know what you consider progress. If it's building your credit score, then you know what you want to do. If it's, but the reality is we want to build our credit score to be able to achieve something, to be able to attain something, to be able to prepare ourselves for something. So you need to write down what it is you're preparing for. For example, for me, I want to buy a house in 4 years. I want to be able to pay for my kids' college. I want to be able to provide a vehicle for them to drive. And so when I write down my financial goals, I also prioritize which one's first, which one's second, which one's third. That way, you can actually build a plan. It's very hard to say, I need $250,000 to buy a house. But it's very easy to say, okay, I make this much money. I'm going to need to borrow this much so I can save this much per month. I can pay down my existing debt to a certain dollar amount to get my debt to income ratio down low enough to qualify. So there's a lot of things that I could do that I can check off the list and actually accomplish instead of just saying, I need to save $250,000. We take that high, lofty goal and we can turn that into realistic steps that we can take on a daily basis. So identifying your goals is the first thing.
ahora que está listo para aplicar, para pedir un préstamo o agarrar una deuda, lo primero que él está diciendo es identificar cuáles son sus metas financieras. Entonces, por ejemplo, la que él dijo anteriormente, que él y su esposa quieren comprar una casa. Entonces, ¿qué es lo que quieren hacer? ¿Cuáles son sus metas? Y de ahí les puede ayudar para identificar exactamente qué quieren guardar, qué quieren pedir, cosas así.
Also, knowing your credit score. When you go in and you're ready to borrow, knowing your credit score and what's on your bureau is going to keep things realistic and you're not going to be disappointed. The reason why I say that is I've had, over the past decade, I've had a number of times where a customer will come in because they've always taken care of their credit, they've always paid their bills on time, they've always kept their debt low, that they assumed that they had great credit. But what they weren't aware of until they came in was they forgot to make that $25 payment to the hospital when they broke their leg. And that's been reporting on their bureau ever since. And so instead of having an 800 beacon, they had a 600 beacon. And while they might still be able to get approved at the lower beacon, remember the difference in the interest rate and how much money you save by having a great credit score. It literally could cost them, $100,000 because they weren't aware of what was reporting on their bureau. I've had a customer that they didn't know a utility company was reporting against them from when they were in college. They didn't realize that their utilities with their roommate was in their name. Roommate was responsible for making payments, had roommate's contact information on there, but was in their name. And roommate didn't pay it. They moved on with life. And the next thing you know, they look to apply for a car loan, and they were declined because of a $100 utility bill they didn't know existed from 3 years ago. So not knowing what's on your credit can have a big impact of when you're ready to finance something else. So knowing your credit report and making sure that it's accurate is huge. Also along with that is knowing your credit score, so having a realistic idea of what kind of interest rate and in turn payment you're going to have.
Lo que él ahora, otra cosa que es muy importante es conociendo su puntaje de crédito. Entonces, si sabe su puntaje de crédito, puede llegar a un lugar y tener meta realista de qué es lo que pueden darle, qué es lo que puede prestar, porque dice que en sus 10 años de trabajando para este banco, él ha visto muchas personas que vienen y que no saben que tienen en su reporte de crédito una deuda de de colección de el hospital, perdón. O puede ser que tengan una cuenta que le están cobrando porque su compañero de cuarto no pagó las utilidades. Entonces, cosas así es muy importante saber, conociendo su puntaje de crédito y usar esa información para saber exactamente qué es lo que pueden prestar.
You can go to the next one. Knowing your debt to income ratio. Again, one of those things that we talk about over and over again, along with making payments on time. Knowing your debt to income ratio definitely will help you know, okay, can I afford this, and keep you from getting in a bad situation where you've got yourself overloaded on debt. And then, you know, explore and get educated in credit tips, tools, and options. We have that website, wellsfargo.com/smartercredit, that's going to have different tools, different education, credit education articles and stuff like that that you can read, so that you have a better understanding of what you're getting into. Now, I say that because there are, you know, different things about credit that can catch somebody off guard. For example, how a loan is amortized, how long a loan can go, penalties that might happen if you fall behind in payments, that not only are you going to owe your loan, but also fees and things like that. You know, being more aware of what could happen in the future helps you be better prepared for when you take that debt on.
Otra cosa importante que hablamos mucho ya es calcular cuáles sus deudas a ingresos. Entonces ellos tienen una página que es gratis, que como ya habíamos mencionado antes, que pueden usar, y también tienen esa otra página que les da más información sobre crédito, diferentes tips o cosas así que les pueden ayudar, nomás para tener esta información en cuenta cuando van a pedir un préstamo o lo que sea, o si quieren nomás ayuda de cómo manejar su crédito. Ahí tienen esa información para hacer eso, y es gratis para todos.
And last thing is, if you have questions, concerns, curious, talk to a banker, whether that be a banker here at Wells Fargo or a banker at the bank that of your choosing that you already bank with or want to go to. Talk to them. Find out what options they have for you. You never know what a bank can offer until you ask. And so the worst thing that you can do is not communicate. Bankers, I cannot tell you how much a banker loves to have a conversation with a customer who wants to discuss things like learning how to budget and learning how to utilize credit and how to take advantage of the things that are out there for you when you have your credit established. Nothing makes us happier, and it's not because of the interest that we earn when we loan money out. It's because we know when a customer comes to us and says, help me budget, teach me how to budget, they have reached that point where they said, okay, I want to do things right. I want to take care of my affairs. I just don't know how to do it. And there's no shame in that, because nobody knows until they're taught. The reality of the situation is none of us are ever taught how to do it. We either learn on our own or we go to somebody else to find out. And there's nothing more painful than learning on our own. So please talk to a banker you feel comfortable with, and we would be glad to sit down and go over these things with you. Even in today's climate of COVID-19, here we are restricting access to inside the bank to see bankers by appointment only. We usually book days ahead in advance with appointments. You know, but call us, see when we can set an appointment for you, and come in and sit down with one of the bankers and say, you know, teach me how to budget. Tell me about credit. How can I do this? We would gladly go over that with you. And last but not least, when you do come in, remember that we know how to be where you're at, and we're not going to look down on somebody if they have questions on these things. Like I said earlier, when somebody asks us a question, like, tell me about credit, I'm curious about this, tell me how to budget, what tools do I have available to us, it brings a smile to their faces because we know that we can help them. We're definitely not going to say, oh God, why don't you know how to budget? We know people are not taught how to do this, and it's up to us. And so to make things better, we have to be able to get our customers, our community come in front of us and allow us to teach them that, which is what we're doing here tonight, teaching y'all about credit. So we love for our customers to come in. Please don't be shy about asking, and we look forward to taking care of you. Thank you for your time tonight.
Lo último que él dijo es que hablen con su cajero. Ellos obviamente están ahí para ayudarles, y entonces no tengan miedo de hablar con ellos. Y si tienen, como hoy que él habló de crédito, ellos pueden hacer eso con ustedes y hablar uno a uno para si necesitan ayuda. Entonces, obviamente no tiene que ser con Wells Fargo, pero están ahí en los cajeros para ayudarles.
So does anybody have any questions? No? Well, if you do, you can get my contact information from Carla. And Carla, I'm sorry I didn't think about this earlier, but I will, in the morning, I'll email you the PDF for this. So you can email out to them so they can have it there in front of them in case they miss writing something down, miss the website or anything like that. They'll have it there in front of them.
Okay, sounds good. Thank you so much.
Thank you. Y'all have a good night.
All right, thanks. Bye-bye. So last, I'm not going to go over the document that I sent you guys, but I do want to just show it to you real quick. So if you have the time, I made this little Word document with a little bit more about, can you guys all see it? A little bit more about what's the difference between paying off the smallest debt versus the biggest, so that the debt snowball versus the avalanche. And so here, there's a video that I thought it was really, really good that kind of goes over the basics of that. And then here are also some tools. So this is a debt payoff worksheet, so you kind of fill it out and you can go through that. You can also look at this different tools, different sites to help manage your money. We'll also be talking about this in our budgeting class, so that's why I'm kind of just briefly going over this, because in the budgeting class we'll be going obviously more in depth about all of this. And also Dallas Habitat has a great website that's free to use, that it's a financial education center, so they kind of go over all of that. So I will not take any more of your time tonight. That will be all. One thing that I did want to say is I will be emailing all of you a budget toolkit that we created here at Bryan College Station Habitat. So please take the time to fill out this budget toolkit before the class, because during the class next week we'll be going over the budget together. So take the time to fill out this budget toolkit beforehand. Perdón que se me olvidó traducirlo, pero nomás había dicho que en esa página que acabo de enseñar habla un poco más de las deudas y cuáles son las diferentes formas que pueden ayudar para pagar esas deudas. Entonces toman el tiempo para ver ese documento y ver esos videos o esos links que yo puse ahí. También iba a decir que les voy a mandar un presupuesto que ustedes van a llenar, entonces aseguren de llenar ese presupuesto antes de que empecemos la próxima clase. So thank you all. Sorry that this class went over the time, but thank you all for being so patient and asking great questions. And that will be all. All right. So make sure to fill out that budget toolkit. Have a great night.